Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Welcome to Talking Real Money, the podcast, the video, the way of life. This is a way of life. Talking real money, real investing way of life. We want you to get money right so that you enjoy a great future. And we're doing it now via audio and video. I'm Don McDonald. That's Tom Cock. And we're glad you're there. Now, this is, we're recording this on a Wednesday, the 12th of May. Last Saturday, actually, I didn't watch it on Saturday. I never watch it live because I don't stay up that late anymore. So I watch it the next day on Hulu or YouTube or whatever.
You're talking the evening news?
No, Saturday Night Live.
I'm kidding.
I watched Saturday Night Live because I wanted to see how Elon Musk did. And
you're kind of hip too. You're one of those people that pays attention to these things.
I give him reasonably high marks. He did a good job.
Apparently, he was in like every segment too, or something.
Yeah, I only watched a couple. My favorite segments are the cold open, which this time was a Mother's Day one.
Live from Seattle. That's not
and Weekend Update, because I find the anchors to be just brilliantly witty. But Elon appeared as an investment professional, as a character with glasses in that segment of the show. And he and Michael Che and Colin Yost from Saturday Night Live were discussing cryptocurrencies, in particular, Dogecoin.
What is Dogecoin?
Well, it actually started as a joke based on an internet meme. Mm-hmm. But now it's taken off in a very real way.
Okay, but what is Dogecoin?
Well, it was created in 2013 and has a circulating supply of 117 billion coins, of which 113 billion have already been mined.
Right, cool. So what is Dogecoin?
Yeah, like I said, it's a digital currency.
Like, okay, for instance, this is a dollar, right? It's real.
Sort of.
Yeah,
sort
okay.
of real. Yeah.
So what is Dogecoin?
About as real as that dollar.
Colin, are you making any sense of this?
Well, I've actually been reading a lot about it, and I'm trying to diversify my investment portfolio. My question is, what is Dogecoin?
I'm glad you asked.
It's a good question.
Well, it's the future of currency. It's an unstoppable financial vehicle that's going to take over the world.
I get that, but what is it, man?
I keep telling you, it's a cryptocurrency you can trade for conventional money.
Oh, so it's a hustle.
Yeah, it's a hustle.
Why did you say that, man? Don't fall to everybody. It's a hustle.
To the moon!
Now, while that was funny, and it was funny, there was an interesting thing that happened there at the end. If you notice, at the end, they got Elon Musk to admit in character that Dogecoin was, quote, a hustle. And we've been saying it for ages. Dogecoin is a game. And Elon Musk, I guarantee you, he played it because he's looking at it going, it's like 2 cents a Dogecoin. I can lose 2 cents. He's made a fortune on it.
Or 1,002 cents.
Thousands of fortunes.
Yeah.
But what happened right there at the end was very telling about you as investors. You are easily swayed. You are emotional creatures, and you don't invest, you play. You gamble, and you do it emotionally. Here's what happened. right there at the very end, the neat thing about cryptos is they trade all the time in real time. In that segment of Saturday Night Live, when it aired live, the price of Dogecoin fell from somewhere in the 70-cent range to the 40-cent range. Like that. Just, and it was all because so many people follow Elon Musk and do what Elon says to do. People, you react emotionally.
And we hear this and see it all the time. Of course, last spring was much more prevalent. There were people that I was talking to on the phone were actually crying last spring after their portfolios had gone down 15, 20%. But I've seen it even more this year. Two sides of it that are fascinating. There's the risk taker side, the greed side. I just talked to someone the other day who, in his retirement account, he has a brokerage link. He actually could go out and buy individual stocks. So guess what stocks he went and bought about a month ago? Tech stocks, right? The high flyers, the things that made Kathy Wood a lot of money at ARK over the last year. And guess what happened in the following month? They all went down a lot. And his 401k went down a lot. There was no reason for him to be doing that. Absolutely horrible greed, excess, excitement. Then there's the other side. A woman
again,
that I've known
why
for
did
30
he
years.
do it? Why did he do it?
He did it because I think at the end of the day, he got jealous. He got fear of missing out, got seeing all these other people making easy money in these tech stocks. Why am I not doing that? Then on the other side, a woman I've known for 35 years who inherited a lot of money and has been not managing it very well the last 3 or 4 years, called me earlier this year and had the money at a major brokerage and said, I told my broker to take it all out because the market's going down. And I said, it's what? It's going down. I said, well, you don't know. It has to go down. It's done nothing but go up. And she's completely sure that we're headed to a big crash. And you may have read any number of people on the internet that say the same thing. So I've seen two sides of this. It's a fascinating thing. And so I always go back to the people I trust when I see this. I trust, Don and I both trust a guy named Jason Zweig. If you want to know what your brain is doing to you around these issues, read his book, Your Money and Your Brain, because in there, he shows you gambling, the emotion created, your brain reacts to gambling the same as taking drugs. It's a high. You're excited. It's all worked up. It's right there in your brain telling you, you got to give me more of this. I love it. Then on the other side of it, when you lose money, your brain acts the same as it's in mortal danger. Going back, thousands of years ago, and you're being chased down by a mastodon or whatever. Can we say that, mastodon? So here's the thing.
No,
you gotta
I don't
know
think
that.
it was the mastodon doing the chasing.
It wasn't running.
It was probably the saber-toothed tiger.
There you go. Or velociraptor. The point of the matter is your brain works against you. I'm sorry. I'm going to keep going until I hit the right one. It works against when you should feel fear, you feel greed. I mean, people are mostly euphoric today because the market's gone up. You should feel the other way. You should feel about risk because when the market's high, it has a tendency to correct from time to time. So the point of the matter is what you just said, Don, is you need to figure out how to squeeze the emotion out of your money. I got a couple ideas around that. Number one, automate everything. Automate paying your bills, automate saving, automate investing so that you cannot get in the way of it. You can't mess. My 401k, the money comes out every check. It goes into the portfolio I designed. That's it. I don't even really look at it. But once every 3 or 4 or 5 months, there is no reason for me to. It's automated. The second part of this is the harder around the emotions. I think instead of regretting things, you should be looking for forgiveness. And the other part is, this is so hard for me to tell people, but I truly, in my life, I feel a great sense of gratitude about all the great things that have happened to me. It hasn't always been terrific. Don knows this better than most. There's been some bumps along the way, but I have a great sense of gratitude. And so I don't feel jealous of others when I look at the fact that Elon Musk has come out of nowhere in the last 10 years to be the second richest person in the world, or first, whatever it is, depending on Bezos and Gates' marital situations day to day. So, I mean, I don't look at the world that way. I'm grateful for what I have. And that is, I get it. I can't just tell you to feel that way. But when it comes to your money, you're going to be better off if you can indeed find more of that gratitude and let go the jealousy. I'll put it that way.
And you will discover, most of you think when the market is doing really well, that you are perfectly capable of managing the ups and downs of the market. You'll say to yourself, we know because we hear you say it to us, in the market, I'm expecting the market to go down. I'm fine. I have the right portfolio for when it does go down. It will go down. And most of you won't handle it well. You'll berate yourself for not getting out before because you could see it coming. I mentioned this in yesterday's podcast. Experts around the globe said for the past 10 or more years that they could see the decline in bond prices coming. They told you to stay out of bonds for 10 years, a period over which, if you'd been in them, you made out really, really well. There are perma-bears who've been saying for the last 10 years, the stock market is about to crash. Well, if you'd listened to them, you would have done very, very poorly. The reality is you won't know when it's going to go down. We do know it will go down. And when it does go down, that's why you have a diversified portfolio. Darn it.
And the right balance between stocks and bonds. That should be well before any market correction or market upturn.
And the right balance for you. Go to Talking Real Money and take our risk quiz. It's free. No obligation. No salesperson will call. Easy. So go do that.
And we doing the free home kit of electrodes just to add a little shock to the whole thing?
Yeah, we tried that, but 3 people died, and
I can't laugh at that.
Your voltage was way too high.
We're kidding. Now you just said that, and now we're going to get banned from YouTube again.
3 people figuratively died. I want to use the term figuratively. They, like when you laugh so hard you die. I just died laughing. That's figurative.
All right.
And so, no real people were killed doing a risk quiz.
In the making of this video. All right.
You have to bleep out the word.
Oh wait, what happened to the guy behind me though? Apparently something.
You can't. That joke only works once.
No, it's going to keep working for me.
No, just for you.
Okay.
We're going to watch our subscriber numbers at YouTube start to go down if you keep beating the dead.
We can't go down that
dead
much.
Horse chair thing. I'm giving you a question before you say something else.
Oh, yeah, please.
Here you go.
Okay.
This was sent in at talkingrealmoney.com. You can also call them in at 855-935-TALK. What?
935-TALK. How do you send in a question to Talking Real Money? I don't even know how to do that.
You go to the contact form.
Okay. I didn't know.
Wait, if you're going to a website and you want to get in touch with the people behind the website, how do you do that?
I usually set a fire outside of their office, and then they notice they come running out. You want to talk to us? Yes, I did want to talk to you. Is this Bank of America? I want to talk
Bank
to
of America.
You. Sorry.
All right, here it is. This is about Roth IRA investment strategy. Shh.
Oh, okay.
All right. I opened a Roth IRA. I've listened to Dave Ramsey, and he has helped me immensely with creating an emergency fund and getting out of debt. I am ready to start investing in a Roth, and I like his format of investing in 4 different mutual funds: large cap, mid cap, small cap, international, investing equal amounts in each fund. However, based on risk, I would prefer to invest in passive funds. Yes, rather than his recommendation of managed mutual funds. Is this a good idea, or should I seek out a financial advisor to select managed mutual funds in hopes of beating the market? Also, my bank, Schwab, offers a robo-advisor intelligent portfolio. Should I consider this for my Roth or stick with mutual funds for long-term investing? Thomas, that is
there's 2 parts.
That is a softball. You can hit that out of the park.
There's 2 parts. I'll go to the second part first. Should this person use the Schwab IP program, or should they build their own portfolio? Well, that depends on you. If you want to manage your own portfolio, You can go. We give you 3 funds you could do at Schwab. Paul Merriman gives you 10 funds you could do at Schwab. I think either one is a great portfolio, easy to do, but you got to do it and then you got to rebalance it. Are you willing to do that? If not, go with the Schwab IP plan. Very low expense, no trading expenses. I think that's terrific. The second part of that kind of refers to what you raised is, do you believe that someone can beat the market? I don't, because I haven't found them for a long period of time. So no, I would use the passive or index funds, again, alluded to earlier, either at the talkingrealmoney.com website or at paulmerriman.com. But if you think you have found the guru, the next Harry Dent, oh, that's right, he didn't work out. Whoever.
You haven't. Trust
So
me,
let that go.
Dave Ramsey hasn't.
Dave doesn't know.
The funds he's referring to are the American
what are the
funds.
Oh.
They're the American funds, and they're sold through the brokers that Dave gets paid to send you to. And he gets paid handsomely to send you to these stockbrokers who will make a commission, by the way, on most American funds up to $100,000. It's 5.75%. Or in some cases, these advisors will sell you an American funds portfolio made up of C shares with average annual expenses of between 1.2 and 1.5% per year. Now, let me just put that in perspective. If you wanted to hire your own full service, personal investment advisor, you would pay that or less for ongoing advice all the time, financial planning ongoing, tax help ongoing, not tax returns, but tax planning. And as a matter of fact, if you worked with us with our ETF portfolio, at the highest price, it's about less than 1.2%.
Yeah, like 1.15. So yeah, no, there's no reason to pay extra for those funds, which over time we would expect return less, both for the reason of higher expense and for the fact that they're actively managed. They're trying to see the future, which no one knows, sorry to say.
No one knows it, and they're never going to know it. They'll claim they do because that's the magic trick that they pull. But remember, all magic tricks are mere illusions. They're not real magic. Same with the investment advice industry.
Don't say anything about Christmas because you're going to ruin the season for me.
Yeah. I saw my 4-year-old niece last night, and
yeah,
she learned some bad words.
Oh no,
because she's 4, and her parents probably say them. So she learned some bad words, and so my daughter said, because my daughter doesn't want her to think there are bad words. She's a new agey kind of child, and she goes, "You can't say that because Santa can hear you."
No, because Grandpa's here.
And she said, "You can't say that in front of Grandpa's or Santa. And Santa can hear everywhere."
If we're going to do those stories, then when I was out with my 4-year-old grandson the other day, and of course I curse at people, while I'm driving. And after about 3 of them, he goes, "Why are you angry with the other drivers, Grandpa?" So I had to think to myself, don't say that anymore. Let it go.
You do. You yell at everybody on the road.
I know. I just
control. And when I do once in a while, I use you as an excuse. Debbie goes,
"Oh, okay.
Don't yell at me." I go, "Tom does it more than I do."
That is
very mature
really
of me,
a poor
isn't it?
example.
Yeah, very mature of me.
Very bad idea.
Do you want one more question before we go?
No, I don't. I've got to go.
What time? It's 1:45.
I know. I'm supposed to be at this gig in 15 minutes, and it takes 10 minutes to get there, and I got to change.
All right, we won't do another question, but we'll do it another time. I'll do it.
Call Saturday.
No, I won't do it because we're doing the Paul podcast this week too.
Yes, we are.
Oh, wow. We got
a lot to look forward to.
All right. Thanks for being a part of the podcast, everybody. We're so glad you're out there. We got to go let Tom go to a meeting or something. Thanks for watching. Thanks for listening. Thanks for being there. Thanks for telling people. Thanks for leaving reviews. You're all the best. Along with Tom Cock, I'm Don McDonald, hanging out, talking real money. Bye.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.